Rich people do not hide their money the way most people think they do, because while the average person focuses on income, the wealthy focus on systems and structures that protect and multiply their wealth over time. And one of the biggest misconceptions about wealth is that rich people simply store cash somewhere waiting for the right moment. But in reality, cash is usually the smallest part of their financial strategy, because cash loses value over time due to inflation. And the wealthy understand that money sitting still slowly becomes weaker every year, which is why they constantly move their money into assets that have the potential to grow or produce income. And one of the most common places where wealthy individuals store value is in assets that can survive economic cycles, such as businesses, real estate equities, and sometimes commodities, because these assets not only hold value, but can also generate cash flow over time. And that cash flow becomes the engine that powers long-term wealth, while most people are trading their time for money. The wealthy are building systems where money works for them around the clock. Another strategy the wealthy use is diversification, because putting all wealth into one asset or one currency creates vulnerability, and wealthy investors understand that the world is unpredictable, so they distribute their capital across multiple areas, including global markets, different currencies, private investments, and sometimes even alternative assets, because spreading risk allows them to survive downturns that could destroy less prepared investors. And beyond diversification, another key element is privacy and structure, because wealthy individuals rarely hold their assets directly under their personal name. Instead, they use legal structures such as companies, trusts, and investment vehicles that provide protection, efficiency, and sometimes tax advantages, and this level of structure allows them to manage wealth across generations, rather than thinking only about short-term gains. And another important difference between the wealthy and the average person is their relationship with debt, because while most people see debt as a burden, the wealthy often use strategic debt as a tool. When managed correctly, debt can amplify opportunity by allowing capital to remain invested while assets appreciate over time, and this approach creates leverage which can dramatically accelerate wealth growth when used responsibly. And the wealthy also understand timing, because markets move in cycles and patience is often more valuable than speed. Many fortunes were built by investors who simply held strong assets through volatility rather than reacting emotionally to short-term fear. And while the media often highlights quick success stories, the truth is that most long-term wealth is built slowly through discipline, consistency, and strategic thinking. And perhaps the most important secret is financial education, because knowledge compounds just like capital. The more someone understands markets' risk and opportunity, the better their decisions become over time, and that knowledge allows them to see opportunities where others see chaos and to remain calm when uncertainty appears. Because markets reward patience, preparation, and perspective, and the truth is that wealth is rarely about a single lucky moment, but about thousands of small, intelligent decisions made consistently over many years. And the people who master those decisions eventually build financial systems that continue to operate even when they are not actively working, which is the true definition of financial freedom. Because the ultimate goal of wealth is not simply having money, but having control over time choices and the direction of one's life. And understanding how the wealthy think about money is often the first step toward building a more secure financial future.